Hello, everyone. Welcome back to the Switch Markets community. I'm Shane Vernier, and this is the 920 EMA Crossover Swing Trading Workshop. Today we're going to talk about what swing trading is. I'm going to show you how to get set up with the 920 EMA, and we're also going to put this strategy on some of our favorite markets. We've got one of our our picks of the week. Our dollar yen trade is actually live now. I want to go over that because we're going to talk about swing trading and how it can really take some of the pressure off of you in the markets. We're also going to show you how to get set up on your 920 EMAs on your TradingView and MT5 platform. So I want to welcome everybody back to the room. There's a lot going on here today. There always is, it seems like, but interesting price action. Definitely flat markets today. I always talk a lot about wanting to trade on Tuesdays. Today is not very good. Today's not very good, and the reason why, I don't really know. We're gonna go ahead and dive into one key news item that I think is going to set the table for what's going to happen with the U.S. Federal Reserve moving forward. This news just broke a few hours ago, so I definitely want to cover that because it's very important to what we've been talking about with the Fed, with Fed policy, what we think can happen here under the Trump administration with monetary policy, and it looks to me like it's going to go one way. So I want to welcome everybody back. Good to see you. Yes, sir. Good to see you. Mark B. Hey, how you doing? Zima, good to see you. How are you? Can you please check the dollar CAD in daily if it form a head, left, and right shoulder pattern? Absolutely, Zima. We're going to go ahead and look at those in just a little bit. I'll answer any of your market-specific questions after we get done with the workshop. I will go ahead and show you my own views on those markets. But if you have any that you'd like me to put the 920 on, we can certainly do that as well. So good to see everybody in the How to Trade community. Tuku, good to see you. Gordon Williams, a pleasure. Andrea Gorwell, good to see you, Andrea. Welcome. Bobby Bob, hey, Coach, Euro USD 920 crossover on the 4-hour. Yeah, the 4-hour chart's going to be one of those that we're going to cover here today. It's a great swing trading, really a great swing trading time frame. I like the 4-hour and the daily, and I like those on Forex pairs and commodities. Now, if we start getting into the U.S. equities indices, I'm pretty much leaning on the daily, not really the 4-hour, because the 4-hour chart is going to give you a very, very distorted view of what's happening with price action and traded volumes. Andy Tong, good to see you. Callie, hey, Shane, good to see you. Good to see you too, Callie. Rock, what up? Yo. Good to see you, man. Nat Niles, always a pleasure, Nat. If you guys have any questions at all, though, be sure to fire away. If I do get a little bit behind on the live chat, just stick with me, and I'll do my best to answer your question before we sign off. All right, let's start with a key news event, though, before we get into our workshop. This is big. We talked a lot about this over the past several weeks. This sets the precedence for the firing of Lisa Cook. No question about it. U.S. Supreme Court lets Trump fire FTC member, Federal Trade Commission member, takes up arguments. So what do you guys think? Supreme Court's going to back. They're going to back the executive's authority over independent agencies. So Trump will have the ability to fire pretty much anybody that he wants to, and that will include FOMC members. Now, unless we see something very dramatic happen in the judgment against Lisa Cook, that is the FOMC member, a voting member of the FOMC, you're probably going to see Cook gone, and it's going to happen relatively soon, more than likely, probably in the next 2 weeks. Cook will be gone, and that'll be another voting member that's coming in for those late-year meetings. And we're anticipating a lot of rate cuts. You can bet your bottom dollar that everybody that is nominated by the Trump administration to the FOMC is going to be a dove. They're going to be very, very receptive to cutting interest rates. This is a big deal. This sets precedent. We've been waiting for this decision for a while. Now the next decision will be towards the Lisa Cook case. That one's on appeal to the Supreme Court as well. We don't know what's going to happen there. I can't speak to exactly if 100% it will happen. I think that the executive's authority will be upheld in the firing of these officials. And what that's going to do is it's going to pave the way for the Trump administration to build the FOMC out of folks that want to cut interest rates and want to boost economic growth. And I'm smiling. You guys see me smiling because I think the jury's still out on it, whether any of it works. We do know this. Interest rate cuts are tough on the U.S. dollar. Quantitative easing's tough on the U.S. dollar. Inflation, I don't know how you control inflation with low interest rates. I don't know how you do it. We're going to find out, though. We're going to find out. Let me see. Tina, good to see you. Just came back. Welcome. Yes, sir. If you have time, can you go over how to use the 920 trading from key levels? Yeah, we're going to do our best to cover as many concepts as I can with the 920. It's a good strategy. It's one of those that's quickly becoming my favorite. I definitely use it with the Fibonacci's. I love it with the RSI, but with today, we really don't need RSI. But we will definitely look at the 920 with key levels. Let me see, Dave. Good to see you, Dave. Andy Tong. Oil is heading bullish. Do you think we will be headed lower back to the end of October to the 55.50 as you discussed before? Great question, Andy. I got the same one from a trader earlier today that got a real nice trade on a great pop in U.S. oil today. I'm sticking to my my bearish guns, Andy. I see the downside for this, but listen. It doesn't mean that you can't make money buying crude in the short term. Don't ever get confused when I start talking seasonality saying, oh, oil's going to go down. I'm talking about like the next 90 days. 60 to 90 days. That's what I'm talking about. I know there's a move in there somewhere. I just don't really know when we're going to get it. And the beauty of having a shorter term strategy or trading signals or whatever you may be working with is you can step up and buy oil today and get in on that nice move. Now, for me, crude oil is relatively simple. 65 has got to be topside resistance. You got to watch that closely. Very, very important that you do that. Don't ignore the 65 level. It's a key Fibonacci retracement zone as well. We've sold 65s repeatedly and had great success. I have no problem selling 65 again, especially this time of year. If we break above 65, if something big happens and we break above 65, then I'm going to have to reevaluate my stance. That's just the bottom line. That's just the way it is. And guys, as traders, that's one of the great things and the big advantages we have as traders is we don't have to trade, number one. And number two, we don't have to take these positions and be right over long periods of time. We can get in and out of the market, and that really is an advantage for us. A lot of people believe it's a disadvantage. It can be an advantage. It can really be an advantage. So that's a good question, Andy. Absolutely fantastic. Let me see, Jilson, what will be the future of gold? Yeah, we'll talk gold a little bit later. It's going up. It's going to 4,000. That was one of our picks of the week in Switch Markets, the Switch Markets newsletter. Ahmed, hello, Shane. I hope you're having a good day. My day's great. Bitcoin is in correction. Also might be visiting 108K. What are my thoughts? I'm buying pullbacks on Bitcoin. We'll cover Bitcoin. All right, right at the end of the stream after our workshop's over, we're going to go ahead and look at gold, Bitcoin, and we'll pull an oil chart as well. If there's any other markets you guys would love to look at, I'm always happy to help. We'll stay as long as it takes, All right, guys, let's get cracking here. Welcome to the Switch Markets community. Remember, if you need a place to trade and you're out pretty much outside of the United States, contact Switch Markets. I've had a lot of you that are inside of the U.S. going, Shane, I'm from here, I'm from there. Can I get into the Switch Markets? Unfortunately, you can't. Switch is not designed, but because they offer CFDs and tons of products that aren't really permitted for trade here in the United States, U.S. citizens were sort of left out. That's okay, though. If you need a broker, if you're looking for a broker, reach out to me, private message, How to Trade Trading Room. I will give you a few rocks to turn over, so you at least have a place to trade futures that's reputable, and also, Forex that's reputable. Let me see. Vincent, hello. Refugee from South Africa. Wow, South Africa. Fantastic. Good to hear you. Dylan, Montana, right here up in the northern part of the United States. Just got back from Europe a few days ago. Still have jet lag, believe it or not. So that's a long trip. So I can't imagine how far South Africa is from here. All right, it's award time. Remember, Switch was recognized by the Global Forex Awards 2025, winning in 3 major categories. Best MT5 Broker Global, Best Trading Experience in Asia, and the winner, the Best Partnership Program, Menya. So a lot going on here with Switch. A lot of folks are really excited. I talked to the back office people when I was over in Europe, and they are very excited about what's happening here. And it's all because of you. It's all because of the traders. It's all because of the trading community and people that want to get in the markets and trade. That's it. All right, let's go over in a powerful. Let me see. Tina Jing, can you use it in Canada? Yeah, Canada is. Switch Markets actually has a ton of clientele in Canada. So yeah, if you're a Canadian national, if you're residing in Canada, absolutely check out Switch. They've got a great service suite for you. I was going to start talking hockey because there are a lot of Canadian clients that use Switch, but I don't know if they're ice hockey fans. If you're an ice hockey fan from Canada, reach out. We'll start talking hockey once the NHL season gets underway. All right, guys. What is swing trading? Remember, this is going to be a swing trading type of a workshop. We're going to go for those longer time frames. I'm going to give you 2 time frames that you really shouldn't ignore if you're trading Forex or commodities. Stocks, a little bit different. Individual stocks, a little bit different. Indices, a little bit different. But Forex and commodities, we're looking at 4-hour and daily charts for stocks, individual stocks, and stock indices, and Forex daily. Daily charts are fantastic. I love the 4-hour chart, though, on Forex pairs, though. Really powerful with this strategy. So this is a multi-sessions trading strategy, so you can actually be in these trades for multiple days. Probably, I think a swing trade, I believe, is qualified up to like 2 weeks. I would rarely hold a swing trade that long just because your rollover fees and your swap fees will catch up with you and really cut into that profitability. But my sweet spot, if I'm looking for a great swing trade, Shane, what's a beautiful swing trade? 2 to 3 sessions, I think. I think you can nail it in 2 to 3 sessions, but I would give myself some time. I would go up to 2 weeks, especially if you're buying like crypto. If you're talking crypto and you're just buying in cash or trading stocks, there's no limit. You can just hit a great entry and hold the thing for 6 weeks, 8 weeks, whatever you want. If you're trading derivatives like a Forex or a CFD or a futures, you're probably going to need to be getting in and out in just a few days. It's because the swap fees will kill you. Swing trading. So why swing trade? You avoid intraday noise. Intraday noise makes us all go crazy. The ones where we get chopped out and the price goes in our direction. It's happened on these live streams a million times, guys. We've been through it getting stopped out just to watch the market reverse in your favor is a really, really tough pill to swallow. I do believe that swing trading, you sort of eliminate a great portion of that. You don't get caught up in the intraday noise. Larger profits, yeah, swing trading, you can really start shooting for those big profits. Not just because you'd be going for like a 1 to 2, 1 to 3, 1 to 4, 1 to 5 risk versus reward, but your initial stop loss is probably going to be a little bit bigger because our time frames are bigger. So even if you're going for a 1-to-1 risk versus reward ratio, there is going to be more money at stake. Potentially your profits are going to be larger than, say, a 5-minute or 15-minute or maybe even a 1-minute chart. So a little bit more money at play, and then you can cash on large extended trends. If you hit the proper entry points when you're swing trading, you can get those 1 to 3s, 1 to 4s, 1 to 5s. I'm not a big fan of trying to go for the 1 to 10s, the 10Xs, the 50Xs, whatever. Swing trading does give you a chance to get those, though. And a lot of folks that were swing trading crypto over the last several years have done incredibly well doing so. And that really is what it's all about. So when we want to swing trade, how do we swing trade? A million different ways to do it. Today we're going to cover the 920 EMA trading strategy. It's a very, very basic strategy. It's one that we've got a tremendous amount of popularity and interest in. It's over on our How to Trade Calm YouTube channel. If you missed the video, go ahead and check it out. This is what we do. 920 EMA crossover, very simple. We buy when the 9 crosses over the 20. We sell when the 9 crosses under the 20. We can use this on any time frame. Today we're going to focus on the 4-hour and the daily time frames because we are swing trading. Now the stop loss, this is where you're really going to make your money, understanding where to put your stop loss. You can go above or below the previous swing low or swing high, or if you're swing trading like we are today with those larger time frames, we may be able to go below or above a daily high or a daily low. Maybe a 4-hour high or a 4-hour low, trying to play a breakout type of a scenario within that swing trading context. Sky's the limit, guys. We have so many options to trade this, and really the flexibility of this strategy is why I really like it. Profit target can be a fixed risk versus reward, or it can be based on market structure. It really is that simple. Now, I'm going to go ahead and show you how to get this set up on TradingView and MT5. If you're sort of a veteran trader, this may be very elementary to you, but let's go ahead and do it. And then I'm going to show you our coded version, and we will be using TradingView for a majority of our trades today. So US 500 right here on a daily chart. Let's go ahead and just get set up. You're going to go to indicators. Click indicators on your TradingView platform, and you're going to go right down to moving average and go ahead and give that a double click. Now, we're looking for exponential moving averages. Very important that we go to exponential. Why? Because an exponential weights the most recent price action. That means as a moving average, it is more indicative, it's more representative of what is happening in the market now. It keeps us current. I favor exponential moving averages over simple moving averages. If you like simple, that's fine. I really recommend using the EMAs, though, on this 920 EMA strategy. So what you're going to do is go ahead and click that twice. Go up to your inputs. You can leave this one at 9. We're going to just leave a source on the close. Don't worry about the offset. Don't worry about smoothing or any of that. Style-wise, I love to have them different colors. So this is my hot one. This is my hot EMA. I like to make that red. That way I always know when red crosses blue, I'm going to be looking to trade. And then right there, let's go ahead and just hit OK. And there's our 9. Okay, so now we got to dial in our 20. We're going to go right here to our settings, inputs. We're going to go to 20, enter 20. So we've got our 920 right there's our close. What do we have? Boom, boom. Everything's just the same. The style here, I like blue. You guys can choose whatever colors that you like. I'm not a stickler for colors. Just remember that they need to be a little bit different so you can easily discern them. The big part of this strategy is that you want to be able to see it automatically very, very quickly. So that's how you put it on TradingView. That's your 920. Take a look at this, though. If you would have bought on this crossover right back here, you would have got a crossover in April, and you're absolutely crushing the S&P 500. Now, is that a swing trade? No, it's not a swing trade. It's a longer-term investment, but this really does show on these longer time frames power, the real power of this 920. Now, on short time frames, we use confirmation. We're not going to use that today, even though it shows up on some of my charts. We're going to talk a little bit more about that in a minute. Okay, let's go on over to our MT5 platform and get you set up here. Relatively straightforward. You're going to go up here to Insert, click Insert. You're going to go to Indicator, and you're going to go to Trend, and that's where we're going to find our moving averages. We're going to go ahead and go down to Moving Average. Give that a click. Now, right here on your pop-up icon or your pop-up, I guess, menu, you're going to go right there to Method. You're going to go to Exponential. There's several methods to choose: simple, smooth, linear weighted. We're going exponential. We're going to apply to the close, and we're going to keep these colors the same. So what we want to do here is just dial in our period 9, and we want to make sure that we get our nice red color there. And you can go thin or thick. Personally, I just go with thick so we can see them all, so we can all see these things on the live stream. You're going to go back up to Insert, Indicators, Trend, down to moving average, and then you're going to go ahead and plug in 20 here, and it's relatively straightforward, guys. Once you've done this once, you probably don't need a refresher. So I apologize to all of you, those of you who've seen these before, but that's very basic stuff. So right here, you're taking a look at the Great Britain Pound USD on a 1-hour chart. Let's back that off to, say, a 4-hour chart, and you can see just how powerful this 920 is. There's your cross under. The 9 crosses under the 20, and that would have been your sell. Relatively simple. So how can we make it easier? How can we really make it easier? Well, the way we can make it easier is use AI, the power of AI. We can code. This is a video that we put out a while ago using AI to code the 920 EMA Crossover Strategy in just minutes. This is over on our How to Trade Calm YouTube channel. Check it out if you're interested. This is what we're going to reference today when we're actually finding these trades, is going to be our 920 coded strategy, and it's going to be relatively straightforward. Once we coded it, we've got the red and the blue. That's the same. We've also shaded in between those. I'm going to tell you the importance of that in just a second. And then also, we're going to have a gold bar as our buy. That's a crossover. The 9 crosses over the 20 and closes. That's going to give us a gold candle. That's our buy. And then our purple candle is going to be when the 9 crosses under the 20, and that's going to be a sell. So before we start looking for some trades, there's one last thing we need to cover. You cannot always trade crossovers and have it work. You can't do it. Now, the reason why you can't do it is when you get into market conditions that are flat, that are rotational, that are compressed, you're going to run into trouble. The crossovers are going to be frequent, and you're going to get chopped up to death. So if you're trading any kind of EMA crossover strategy, be it the 920, all right, be it the 5813. A lot of folks really love that strategy. I do too. If you're working with those types of crossover strategies, you've got to make sure that the market is active. The market is active. Now, one of the great things about swing trading is we don't have to focus so much on time of day because our intervals are bigger. We're going to focus on the 4-hour and the daily today. So you don't necessarily have to be trading at peak liquidity in the peak times just because we're taking in larger ranges into account. But let's say you run across the holiday, or maybe let's say that the market just really flattens out, like a Japanese yen trade I'm going to show you right now. It's an interesting trade. We put it on our pick of the week for our Switch Markets pick of the week over on the Switch Markets YouTube channel. Check out that video if you like. It's a higher risk trade because the market's flat, but it still has pretty good potential. So remember, you can't always trade EMA crossover strategies. It's not a disclaimer. When we swing trade, we have more leeway. Just always remember, holidays, bank holidays, that's big. You got to know when those are if you're going to use a longer time frame. And then also, if the market itself is just flattened out completely and there's no direction, it's really difficult to trade this. Although you can get in on a breakout, just remember it's a higher risk trade, but you can make a lot of money trading flat to trending markets. Essentially, you're predicting the trend. All right, that's it, guys. Let's go trading. All right, let me see. We got a ton of questions here that I'm behind on. The first one that we're going to go over here, the first market that we're going to look at is going to be what we put out in the Switch Markets YouTube channel, and that is one of our picks of the week. Let me see. Ruben, hello from Nigeria. Hello, hello, hello. Good to see you. Cali, I'm also from South Africa, South Coast. Really, wow. Long ways away from here, but great to see you. It's one of the great things about this room and all the things that we do here is it's a global community. There's folks here from all parts of the earth, and that's absolutely fantastic. The world's a big place. We always say it's a small place. I don't know. I was on an airplane from Denver to Frankfurt for 10 hours, 10 hours straight, going 500 miles an hour. The world is a big place, so it's great that the internet can bring us all together. It really does. It facilitates the free flow of ideas, and that's absolutely fantastic. Let me see, Andy. I need to leave, but we'll catch you on replay. Absolutely, Andy. That's one of the great things about this. We're always cataloged on demand, 24/7, 365. You watch these streams whenever you want. Let me see. Tina, will it be good swing trade? Will it be a good swing trade for beginners as it is slower pace, do you think? Absolutely, Tina. Absolutely. Swing trading is, as long as you dial in your leverage and you don't end up risking thousands and thousands and thousands on a given trade when you're a beginner, you can do very well. You can do very well because the pressure's off. You don't have to worry about, like tick scalping, what I do. I've done that on live streams for you guys before, and it's incredibly stressful. A lot of pressure. Swing trading is a little bit different. As long as you've got your stop loss, your profit target, and your entry point down, you're ready to roll. You're ready to roll. So I think that this could be a great way to get away from some of that intraday pressure and noise that really chews up. They say 95% of traders wash out. I don't believe that number at all. It's a lot less than that, especially for those folks that actually stick with it and dedicate themselves. But I would say out of the level of folks that get washed out of the markets or end up quitting, I would almost guarantee you, and I would bet a sizable sum of money that a majority of those folks are trying to scalp on 1 minute, 5 minute, 30-minute charts and trying to do the intraday high leverage dance, which is really difficult, but it can be done. We do it here all the time. It can be done. You just have to decide what kind of trader you want to be. Swing trading, definitely less stressful. I'll tell you from personal experience, swing trading, I'm going to show you a few things. We're going to look at crypto. We're going to look at some individual stocks. Those trades have been a lot less stress for me. A lot less stress. You just put them down and let them go. Let them go. Let me see. Tina, can the 9 and 20 apply with the M and W pattern to make them more robust? Absolutely. Combine the 920 with whatever you like. I mean, if you've got a nice double bottom or a double top and you're looking at a 920 maybe to break a double top or maybe off of a double bottom, absolutely. That's a great idea. I mean, it's definitely worth looking into. Let me see, Wakanda. What's the best time frame to use for swing trading? 4 hours or daily? For Forex, I would say I would look at a 4-hour chart and then a daily chart. Now, if there's not much difference between our 4-hour range, I'm going to show you how to set the trades up right now. If there's not much difference in the ranges, I would just go with a daily. But if you're in a real volatile market, you're probably going to have to go to a 4-hour. But I love the 4-hour. Let me see, Pakistan. Yo, Pakistan. Good to see you. Good to see you, Noor. Not a terrorist. Well, fantastic. It's good to hear. I didn't think that you were, Noor. You're interested in trading. That's a good thing. So welcome. Everybody's welcome. Dave, F19, with the 920 coded version, can you receive notifications to your mobile when there's a buy or a sell? You can program that. I probably should do a video on how you can program that. You could use that Pine connector to use that 920, code it with Pine connector, have it come out on your MT5 and send you an alert. Absolutely. It can all be done. You could even just do it with TradingView. Just take a little bit of research and figure out how to build it, but it can all be done. I haven't done it yet, to be honest with you. I haven't done it, but you can definitely set alerts up. All right, one last question, then we're going to get in here and set up some trades. All right, Tina, how long can be classified as swing trading? What is the duration, please? A few days of swing trading. Yeah, we're talking about multiple sessions. So I would say at least 2 days. So at least holding it through one overnight, I would call that a swing trade. But the duration, it varies. I mean, if you go online and Google it or use AI, they'll probably tell you like up to 6 weeks. I would say a maximum of 2 weeks. That's just me. I think anything over 2 weeks is an intermediate term investment, but that's just me. A lot of folks believe that you can go all the way up to 6 weeks with a swing trade. I would say, like if you were trading stocks or crypto with cash and you don't have to pay rollover fees or swap fees, I'd say, yeah, you can let it ride as long as you want. If you get into the Forex pairs, though, where every time you go through a Forex settlement, they're hitting you with the swap fees, they're hitting you with different fees, you're going to run into trouble because those fees will really eat away your profitability. So it's a great question, Tina. I think that it's probably just a matter of interpretation. I would have a problem holding any longer than 2 weeks, though, especially if I was running a Forex pair where I was paying swap fees. Hope that helps. Let me go. Oh, yeah, ChatGPT can build a Pine script. Absolutely, yeah, we've done that live. Okay, guys, this is our pick. One of our picks of the week. This is the U.S. dollar, Japanese yen. Now, we have a bullish bias. Well, a few of the things that are interesting with this trade is, number one, relatively flat market. No question about it. This buy right here that we got back on the 2nd of September, this ended up being a loser. And then you had a sell right here, which ended up being sort of a loser. And now we're back on the buy side. So what are we really waiting for? We're waiting for a bullish break. Could we get it? Absolutely. There's enough volatility here to where we could get it. Now, a lot of folks believe, including myself, I'm on here basically railing every day against the U.S. dollar saying it's going to be weak, it's going to be weak, it's going to be weak. Yes, it is. But could it be strong like for the next week or so, the next 4 or 5 days? Absolutely. That doesn't change our long-term view towards something just because we get a bump out of a few days. So here's how I would set this trade up, and I'm going to go ahead and get rid of everything on the chart here. I got it all drawn up for our video that we made. So what's our entry point going to be on the 920? Remember, when the 9 crosses the 20, we buy. So right there. There's our gold bar. You're going to buy right on that bar close. Okay? So if you're long, you're probably long from like 147.91. Now, where's our stop loss going to be? You have a couple of options. This is a daily chart. You could have put your stop loss right beneath that daily. I don't believe in that. I've done a lot of these workshops. I always stress to aim for the swing lows and the swing lows and the swing highs. So right there is a nice swing low. My stop loss would be right beneath that swing low. Where would my profit target be? I've got options. We've always got options. So let's say I'm going to make that trade. Now listen, we're swing trading now, so these risks are going to be bigger because the time frames are bigger. What's my risk going to be here? Let's say I got in at 147.91. My stop loss is down there somewhere around 145.38. What is that, about 200 pips? 250 pips, roughly? So if I was going to trade this with a 1-to-1 risk versus reward ratio, I could easily just go 250 pips up the queue, be like right up there at maybe 150, 40 something like that. We could do that for our profit target. That's a 1-to-1. If I want a 1-to-2, a 1-to-3, a 1-to-4, I could put the profit target way up here. That's a fixed risk versus reward. Another way to look at it would be just to get the long position tool right here and go ahead and just bid it and say, okay, what do we want? We know where we got to put our stop loss in, right? Something like that. So our risk versus reward, that's going to be roughly about a 1 right here. That would be a 1. If you want to go with a ratio of what, 2-to-1 or 1-to-2, you can do something like that, which essentially that's going to be your trade. How about market structure? I know a lot of you love ICT concepts and you're really big on market structure, and that's a very popular way to trade. It's not really my cup of tea, but that's okay. You probably would be aiming for that top of that liquidity sweep right there. Shane, what's a liquidity sweep? A liquidity sweep is just an area where you got a big candle. So right there, you had a test up here, and then you got a big bearish liquidity sweep. Knocked everybody out of the market. And since then, we've been rotating essentially since the 1st of August. That's a long time to be rotating. So could we be doing this for our profit target? I'd say, yeah, that's not a bad profit target. Will it work for you? Well, let's see. I don't recommend going underneath 1-to-1. If you bring it right down, maybe right in here, yeah, you could do something like that, 1.25. So essentially, that's how you're going to build your trades. You're going to be looking for swing highs and swing lows. Right here, if we're on a buy, we're long. That's going to be your swing low is going to knock you out probably somewhere right down in there. Profit target is going to be a swing high or a fixed risk versus reward. So let's go ahead and execute this trade. Let's go to our trading panel. Remember, these are demo dollars. I don't want anybody to try to trade the size that we trade on these live streams. Sometimes it's really small. Sometimes it's really high. Let's go ahead and just go ahead. What we're going to do right now is we're going to buy market just to get us into the market and illustrate how this trade is going to function. All right, so we're long right here, which is a little bit better than our original entry point. That's another thing you can do, you can think about doing, is to wait instead of buying right away on your gold candle. You could wait for a pullback to the moving averages. You can even use Fibonacci's. That's a sort of a topic for another time. But right here, what could you do? You could put your take profit up where we had it. You can put your stop loss down here where we had it. Okay, now take a look at the numbers. Take a look at the numbers. We're shooting for about 2,200 on this trade. We're looking at about risking 1,500. What do I always say? 1 to 3% of your total account balance. Now, here's the thing about swing trading with a longer duration, longer time frames. You're going to be in the market for a longer period of time, which means you're going to be exposed to something called systemic risk. You have to be very certain when you're trading these pairs that there's either going to be nothing coming up that's going to really shake our foundations, or there's going to be a market driver that we believe is going to help us. What do we have going this week? BOJ minutes, okay? That could rattle the yen a little bit just because we don't really know the size and the scope of that ETF sell-off. I cover all of these. I cover all these concepts in the weekly, the picks of the week over there on Switch Markets. Check it out. But what else? PCE on Friday. Thursday, we've got US GDP. We've got a lot going on towards the end of the week. So I don't expect anything to happen with this trade until the end of the week. Is this worth the risk? We've got a good location. We've got a good stop out point. Our entry point's pretty good. Is it worth the risk? I would say it's a higher risk trade just because this market has been chopping sideways. We really are playing for a break. But if you're going to play for a break, do you play it with something like the 920 EMA? I would say so, yeah. So you would have to decide if this risk is worth your time. As far as, what are you shooting for? This 1,500, you're looking for 1 to 3% of your trading account. If that's 1%, how big is your trading account? About 150,000. You could do that with a prop account. Be a piece of cake. There's $150,000 prop accounts out there. Could you go to 0.5% and say, okay, I've only got a $75,000? Sure. What happens if you just want to dial this down to maybe play for $100? Maybe just risk $150 down here and shoot for what? $175 or $200. There's nothing wrong with that. You just take a smaller position size. That's all. Dial in your position according to how much money you have. That's the number one part of trading. Don't get overextended on these trades because if you do, then the market has to go your way right now. And that is a really difficult thing. We can't time it. All we've really done here is we've put ourselves in a position to the bull. That's it. But we've done it in a structured fashion. Every good trade has three parts. It's got a take profit, a stop loss, and an entry point. Our entry point is when the 9 crosses over the 20. That's our buy. Our stop loss is beneath that swing low down there, okay? Top side, profit target. We use market structure here. You can use a fixed risk versus reward, whatever you'd like. Okay, so that's a good look at the U.S. dollar Japanese yen trade and really how you execute it. So let's go in on the prowl on some of these other markets that were mentioned to me earlier today. Let's go to Bitcoin. Let's see what we've got on Bitcoin. I don't know what we've got. Maybe we took a buy here the other day. I believe we did. There would have been your daily bid, something like this. That would have been a buy signal. Where's your stop out point? We put it down here beneath this macro swing low. Okay, if you put it up here, you're already out. If you put it down here, you got a significantly more range to work with. Could you put it up in here somewhere? Maybe this order block. You could. 110, maybe just stop yourself out under 110. If I'm going to do that, I'm going to put it right down there, right around 107. Still gives you an opportunity to the top side. What do you have brewing here, though? You've got a crossover brewing that may, in fact, may come to get you. If you go down to a 4-hour chart on Bitcoin, you're probably going to get conflicting signals. And you did right there. There was your sell back on the 19th of September, and it worked like a charm. You've got a nice big sell there. And now you can start to see the 9 and the 20. As they widen, that trend is sort of perceived to be larger or stronger at least. Something like this. Very interesting. Is the pullback going deeper? Well, on the daily chart, we still have plenty of room to work. Plenty of room. On the 4-hour chart, yeah, it looks like this pullback could definitely go down and at least test 110. So I'd be watching this carefully. We'll throw some Fibonacci's on Bitcoin here in a second before we sign off. Let's go to the gold market. Let's see what's happening in gold. 4-hour gold. Now, there's no question that we're bullish gold. We've been bullish gold, bullish gold, bullish gold. You guys are tired of hearing me say it, but the top side of this market really does suggest that we're going to 4,000. And that's the last time I'm going to say it, at least for a day or two. I've been harping on that every single day, and it really does look like we're correct. 37.50 put up a little bit of a fight on this 4-hour chart, and now you're just sort of milling around trying to figure out what the next stop is. We could easily go to 4,000 this month at this pace. I mean, we're moving up higher every single day. A little bit of weakness today, I would say, just because we're not up 2%, but you're still up about 1%. And, it's like $40 moves every single day. We're getting to 4,000 in a hurry. So what you've got right here is you've got a situation where on the 4-hour chart, if you wanted to look exactly where we got our signal, right there was our crossover. So here was a cross under. That would have been a signal to short. Compression, break. Now, one of the things that we would talk about is, okay, do we really want to take that short? Do we want to take a short against such a strong trend like we have in gold? I discouraged it. I was looking for buy signals. Why? Just to follow the trend. That's it. Do you have to do that? No, you don't have to do that. But if you're stopped out here, right, there's your sell. Let's just review how this trade would have looked. There's your sell. Where would your stop loss have been? A couple of options. You could have put it right above this signal bar, which also was a swing high. You can see that's sort of your spike high right there. Or you could have put it right up here. The real question is, what are you going to do when this happens, when you finally get a buy signal? You probably are going to want to at least reverse your position right there. This would have been one against the trend that you could have played very tight and still had a nice chance to get long on this 4-hour chart. Really, you could have. And this right here, you could have got stopped out and then reversed it. And if, in fact, you got long, I mean, the buy signal was right there from 36.84. You're almost up $100 at this juncture. Stop loss is right down there. Very good trade, guys. I mean, I hate to reverse engineer these because everything's always correct in hindsight. But realistically, I mean, look at what you've got. Your stop loss was right down in here somewhere. I mean, you're right around almost a 2-to-1. It's paid off a 2-to-1 so far. I mean, you may even be able to hold that longer. Who knows? Interesting stuff on that gold gold trade. What we want to do now, though, is actually say, okay, a 4-hour chart is fantastic for this. It really is, especially for things like gold, things like your majors. Let's go to the Euro-US dollar and have a look. Okay, Euro-US dollar 4-hour. What are we on? We're on a 4-hour buy, no question. Nice big sell right here. You got a pretty darn good move right there. Now you bounced back. Crossover right there, gold bar. What do you want to do? You want to buy the market. So let's go ahead. Let's put our buy down, and let's make it worth a little bit of money this time. Remember, you got to use your leverage as you see fit. Definitely want to be able to manage your trades without getting stopped out consistently because of leverage. Something like this, though, very interesting. Okay, so let's design the trade. The entry point's pretty good. I mean, we're right around the close right here. I have no problem buying right now. It doesn't matter that it's 16 hours later. Really, it doesn't. Nothing has really happened. We missed a bit of a pullback, but this trade is still incredibly valid. So what do we want to do? How do we want to design it? For me, it's relatively simple. 4-hour chart, Euro USD, stop loss. I'm going to be working, definitely going to be working with my swing lows, my macro swing lows. And what I mean by that, that's sort of where the market bottoms out down here. You can see it's like we had a lot of traders that over the years that have had different, different words, nomenclature, something like that. It's sort of, this one right here, let me dial this in. This would have been sort of that fish hook formation. You know, it sort of looks like a fish hook when it's real steep. Something like that. That's what I would call a sort of a macro swing low. Pretty good locations for your stop losses. Now, the only thing is everybody can see it. Everybody in the world knows where that is. That's okay. That's why we pad it by a few pips. So where would potentially our take profit be? Well, if we're smart money traders, right at the top of that liquidity sweep, what's up there? 119.18, that's not bad. You can see it's a positive risk versus reward, just a shade over 1-to-1. But let's say you wanted to go higher with it. Could you go up in this range? Maybe just up just shy of 120, something like that. You certainly could. Now, in this case, you've got almost a 2-to-1 risk versus reward, a pretty darn good entry. Remember, every good trade has 3 parts. You've got an entry point, an exit point, an entry point, a stop loss, and a profit target. There it is. Not bad. That's not a bad trade. How long do you think you're going to be in this trade? We genuinely don't know. We don't know. Could be tomorrow. It's about 160 pips up there. Could be Thursday. Could be Friday on core PCE. We just don't know. So we're watching this closely. We're watching for developments. What could we say about this trade, though? Honestly, always think through all your trades. What can we say about it? We've got a pretty darn good position to the long. We've got a nice stop out. We know exactly where we have to stop ourselves out. We've got an opportunity to catch a runner up to a pretty good key level up there at 120. And if we want to be more conservative, what can we do? We can just go right to that liquidity sweep and dial it in right around a 1-to-1. There's nothing wrong with that either. It's all your decision. What will make you successful trading this strategy is your ability to locate your stop losses, your ability to understand which markets are likely to move and which aren't, and also your ability to stay in there and get your profit targets. That's what it's all about, guys. If you're going to trade this type of strategy, that's what it's all about. All right. Let's see what else do we got going here. I got way behind, guys. Way behind. Let me see Godwin from Nigeria. Good to see you, Godwin. Welcome. Let's see Andy Tong. Oil on the 4 hours looking like a setup on the 920. All right, let's go ahead and have a look. Let's go to U.S. oil. That's exactly what's happening, Andy. It's a fantastic spot right here. You got a 4-hour chart. You got about 21 minutes left in the formation. Probably not going to get it right now unless we get if we get a rally up into here, then you will get a buy. Then you will get a buy signal. And then the question is do you buy here when we know 6,500 up there? 65 is going to be a key area. You probably could do it. You might be able to get a few bucks off of that. We're watching for the crossover here. Probably not going to happen this 4 hours, maybe the next 4 hours. Good call, though. Fantastic spot. Let me see. Tardis Crypto, will you talk about the first 4-hour candle box? I'm not sure I follow what you mean there, Tardis, T-A-R. The first 4-hour candle box would be, I'm guessing, just our signal candle, right? So the purple would be for a cross under, and the gold would be for a crossover. You just want to go either long or short right on those bar closes. Or if you want to wait for a retracement, I've made a video on that too, wait for a retracement into our range. But I would say the biggest thing to do is just wait for a clean crossover. That first 4 hours is absolutely imperative that you get the crossover. As far as what normally happens, typically the first 4 hours after your signal, if that's what you mean, typically you get a retracement. The only thing is sometimes you don't, like right here. This sell, you missed your money if you waited for a retracement. So, and the same with this one as well. Tough to say. Let me see. Mark B, U.S. dollar, Japanese yen, buy carry trade. That's essentially what you're looking at for this week, Mark. And the reason why we sort of went to those technicals, the reason why we went sort of that direction was because we did get the crossover. Okay, and the crossover was absolutely huge. Not on the 4 hour. You can see we had a 4 hour back here, but on the daily, the idea was real simple. You were looking to see the U.S. dollar bounce back from just getting pummeled over the last few weeks. And when the U.S. dollar bounces back, typically that's going to be a pretty good rally against the yen. Right now, the trade's underwater, though, and you can see that these moving averages are flattening out. That's a key. I'm watching that closely. But if you do get a cross under, let's say you get a purple bar set up, but that's a sell signal. The decision is yours. You can reverse your position. You can stop yourself out of your current position, or you can let it ride. I typically let it ride. I call it noise, especially when things are as tight as they are right now. I would call that noise, and I would let this thing ride, my opinion. Intraday trading is nice. Yeah, Eli, a lot of folks like intraday trading. Swing trading, intraday trading. When you've done this long enough, you can do a little bit of it all. Let me see, Norm. Now, can you tell us why you're not a big fan of ICT and how little you support it? Well, no, hey, listen, as far as supporting it goes, I'm not a naysayer. There's only a couple of rules on my streams. If it makes money, it's the right answer. And if you're making money with ICT, go with it. I have no problem with it. It's just not the methodology that I've used. I don't really have a problem with it per se. I look at swing highs and swing lows. Essentially, that's what ICT is built on, and order blocks. And for me, those ideas have been around a long time. I was taught about value areas, swing highs and swing lows 15 or 16 years ago. So to see people come out and start using terms like liquidity sweep and fair value gap and order blocks and all this stuff, it's just a different way to package really old ideas. So for me, I just stick with my own view of the markets that I've developed over time. But if you like ICT and you like the way that it's packaged and it makes sense to you, then roll with it. If you can trade it profitably, roll with it. I mean, we've had traders, or we've had analysts here, trading coaches here that were ICT experts. Connor was an ICT expert. That's what he did. That's what he liked to do. Let me see, Eli, 50 pips a day is better than nothing. Absolutely. 50 pips isn't bad. Let me see, Tina, could this 920 EMA work together with the Bollinger Bands? Absolutely. I mean, we could put Bollies up there. You could add Bollinger Bands right here. And, it just depends on what you want to do with your trading. We could add Bollinger Bands. First thing you guys know me with Bollies. First thing you've got is are they tight or are they wide, far apart? If they're far apart, probably trading a crossover would be a better idea. If they're tight, you got to really watch getting chopped up. Really the same thing as our RSI. When RSI is sort of outside of these brackets, you're looking to trade. When it's right at the 50, getting about a 50 on the RSI, it's a little bit tougher. The idea behind this trade, and it's getting beat right now, but the idea behind this trade was to catch a breakout. Is that harder to do? Yeah. Can the 920 help you catch breakouts? Yeah, it can. So we're positioned to the long. We're just going to wait and see exactly how this thing pans out. Let me see, Andy Tong, would you look at the daily and then drop down to the 1 hour 920 crossover to get even better risk versus reward? 100%. 100%, Andy. The one thing that I would really guard against, though, and at least caution against, you can start with a daily. You can go down to a 4 hour, 1 hour, but odds are you're going to get conflicting signals. Odds are your daily is probably going to show you a buy, whereas if I took this dollar, let's take this down to like a 30-minute, what are you going to have? You got a sell setting up. You got a sell setting up right now. So if you got a sell there and you've got a buy on the daily, which one's wrong and which one's right? They could both be right. You could say, oh, yeah, we're going to get a deeper pullback here on this 30-minute and make money there, and then turn around and say, yeah, but I still love my swing trade to the top side, which is exactly sort of what we've designed here. You could trade them both. You're going to need separate accounts to take counteracting positions, but you can certainly do that. My only thing I would caution, Andy, is you're going to get conflicting indicators. There's no question about it. So if you start at a daily and you've got to buy, and then a 4 hour you've got to buy, and then the 30-minute you've got to sell, oh no, what do I do? I don't know. I don't know what to tell you. I would say your trade ideas need to be designed for your time frame. A lot of folks really love reverse engineering things down to like a 5-minute chart and taking a position for the day. It could be good. It could be good. You're just going to lose a lot more. A lot of the time, your winning percentage is going to be lower, but you may make a lot more money just because you time the market perfectly. That's up to you. Just remember, the shorter the time frames you go, the more that you're going to get chopped out. No question about it. Let me see. Blue Mango. Hi, Shane. I hope you're well. Can you please look at XRP and the Aussie Kiwi if you have time? Yeah, we'll go ahead and look at a few more markets. Which ones did I cover? We've sort of already looked at gold, Bitcoin, the Bitcoin and oil. Yeah, we already looked at those three, so we'll look at a couple more. Let me see. Euro is going to dethrone the dollar if it keeps getting stronger. Definitely possible. Definitely possible. I mean, listen, I was just over there in Europe and I traded my dollars and I didn't get many euros back. It was tough. You'd go in with $400, and you'd get 300 euros back after they tacked on all the fees and everything. Let me see, Angeli, is there a way to make this indicator available on TradingView? I get errors when I try to code it on ChatGPT. Yeah, check out the comments section of the coded video, Angeli. I've posted all the script in there. Take that script, paste it into your Pine editor, go make a new indicator, go to new indicator, and paste it all in your Pine editor. Start right at the very top, or I believe maybe line 4, one of those two. I think it's line 4 you start with. But clear it completely out, paste the script in there, you'll be good to go. It's underneath the first comment there. It's one of the comments underneath my pinned tweet there. You shouldn't get any errors there. Breakout trade or retest? I like retests. I like retracements, but breakouts, hey. Let me see. NAS 100 just jumped. Yeah, man, it's starting to look negative out there. Starting to pull negative. Let me see. Mark B, is there any confluence indicator for avoiding range consolidation periods for the 920? Well, to be honest with you, I mean, Tina just had a very good idea. It really was. It's a good one. I hate always bringing everything back to what the indicators that I use, but Bollinger Bands make it real easy for me to see. Right there, your Bollinger Bands are open. You can see the volatility is picking up. There's your buy signal. You killed it. Right here, the Bollinger Bands are getting very, very tight. What does that mean? It means price action is very, very tight in here, and essentially we're playing a breakout trade with this type of idea, but you may just avoid the chop. Nothing wrong with that. Bollinger Bands could definitely work. It's a good idea. As far as RSI, typically what we use for our short time frames, you can use RSI for these longer ones. Just remember that it's not going to get outside of above 70 or below 30 very often. So when you're working with an RSI and you see it around 50, then you know you're in consolidation, which is exactly where we're at now. That's why this is a higher risk trade, but the rewards are potentially very good if we do break out. And we have some market drivers that can break this market this week. So that's why we're watching it. Timing's everything. Yeah, timing's not everything. It's the only thing. All right, everybody. One last thing. If you want to use this on stocks, individual stocks, I would say that you got some pretty good stuff here. 920 EMA crossover on individual stocks is pretty good. And one of the reasons why it's good is you don't have to worry about leverage. So like, let's say we bought a share of Palantir right here last week, or probably the week before, the 12th of September. If you bought some Palantir right around 170, you got a real nice pop, and your stop loss is down here. And the beauty of it is it's a cash stop loss. So you're not leveraged, meaning you just ponied up, $400 or $500 to buy a few shares of this, and you're just going to go ahead and take your gains accordingly. And your losses, you don't necessarily have to realize your losses right away. You could stay in the trade for a while, even though I would consider exiting once your stop losses hit. It's not as critical because there's no real leverage involved. You're just on a cash basis. Now, if you're buying stocks on margin, that's completely different. You need to make damn sure that you have the margin money to cover your positions. That is absolutely key. But something like this, that's a pretty good stock. Let's go ahead and take a look at who makes Tylenol. I mean, some bad news came out from Tylenol the other day. Let's see, Tylenol. I don't think that's the company, but maybe Bayer Drug. I know Bayer is big. Let's go ahead and take a look at Bayer AG, which was traded. Yeah, that's not the one I'm looking for. Let's go for another biotech. What would be a biotech? Not Palantir. That's tech. Just a straight biotech company. Maybe AstraZeneca. That's another good one. AstraZeneca right there. So what happened to AstraZeneca? That's India, but you sort of get my meaning here. These biotechs are one of those that really run into some problems. They run into some problems when there's something that comes out from the government that doesn't necessarily shed a lot of positive light on the industry. Let's see, Eli Hims. All right, let's take a look at Hims. Hims and Hers Health. Okay, so you got a daily crossover. You got a buy back there. Your bid was at 51.71. You got a high up there about 59. What is that, a 20% pop? You can't really beat that, can you? You're bidding 51.71s. Your stop loss, you could put your stop loss right beneath there if you wanted, or you could put it beneath the swing low and give it time to work. That's still about a $10 rally. That's fantastic. You'll notice that things sort of not looking so good after yesterday's announcement out of the Trump administration against sort of vaccines and all sorts of medications. But you can see today another big negative day, about 3%. Still, though, pretty good trade. You had a nice sell. Yeah, you can't really sell on stocks unless you have naked shorting, but the bid right there, this bid right up in this zone 58, got a tremendous rally there. This could be very good for stocks. Very for stocks. Yeah, Andy Tong, I meant if all line up. Absolutely. If you can find it, maybe build a framework, an AI framework or something that shows you when the daily lines up with the 4-hour, lines up with the 30, or maybe you just want the daily and the 4-hour to line up. It could absolutely be great. Could absolutely. I mean, in that respect, it would show you that the price is moving all in one direction, not really regardless of time. I think that would be a fantastic filter. Fantastic. I've looked around and typically we get a signal, the market pulls back, and you're going to get conflicting signals a lot of the time. But if you don't, then yeah, that could be an absolutely fantastic system. It's something that I haven't really looked into. It's a good idea though. I mean, these are all great ideas. Let me see, Jilson. Can you explain the crossovers again? Like which one crossovers for a buy or a sell signal? Like I am not moving average user basically. Sorry, no worries, Jilson. Just watch the live stream over again. I would do it for you, but we've been running for about an hour now. But go ahead and check out the live stream again. I cover all that in the very beginning and break it down for you real easy. So just watch this thing on replay. Let me see, Eli. Mara. All right, let's look at Mara. Tylenol. Kevin, you a consumer health company spun off of Johnson & Johnson. Fantastic. Let's look at Kenvue. Couldn't have been a good day for Kenvue. Sure wasn't. I mean, that's ugly. Gap down. Why is it gap down? Because they came out and linked the Tylenol to the some autism rates. That's bad news for Tylenol. So you lost about 7.5%. Today, a bit of a bounce. You're up 2.83%, but still down. Very, very ugly situation. What do you think we could be looking at here, though, for a Kenvue? What if we like Kenvue's technicals, or excuse me, Kenvue's fundamentals? Let's go back and take a look at their earnings real quick. Okay, their earnings, topside beat. All right, topside beat at 3% back in August. Downside revenues are down a little bit. That's not a big deal, though. The revenues aren't. The topside beat, the EPS, is definitely what everybody's looking at. So if you have a strong EPS and you're saying, okay, what is the recent things going to do to Tylenol? May hurt it a little bit in the short run. What if you get a crossover? What if you get that bullish crossover? Maybe you get that bid from someone. Maybe we sell off down to 16 and they get the crossover. That could be a very good trade. Very good swing trade just for a few weeks or a couple days. Let me see, Eli. Let's look at Mara real quick, and then we'll go ahead and call it a day here. And we got one more question for Bobby Bob, and I'll call it good. All right, Mara Holdings. You take a look at where would our crossover be right here. This is one thing I will caution you. Sometimes when you get an exact doji like that, the gold doesn't show up. See, you got to really blow your chart up like that. So that would have been your gold bid, something like that. Now, one of the ways that you would probably want to approach stock trading with the 920 is you would probably want to say, okay, maybe during after hours trade, after you see that daily close, maybe you want to buy during the after hours right after the close as soon as you get that formation. And the reason why I say that is a lot of times in stocks, you see the price open maybe definitively up or down from your entry point. It's not like we're doing this on an intraday Forex chart where it's going to open exactly where the previous bar's close was. So you probably want to do that during the after hours, maybe right after the market closes, and take your position accordingly with stocks. I like it with stocks, though, guys. I really do. The 920 with stocks is pretty good. This would have been another winner. We haven't seen many losers. Right there, 16.25 would have been your bid, and you topped out somewhere up around 19, and that's a 275 pop. That's a big pop. What's 275 divided by 16? Just told their Bino math. 275 divided by 16 is about 17%. I mean, guys, those are huge. Those are huge gains, and just really, I mean, that is a true swing trade for me right there. There's your bid. Maybe you're only in it for two days. Take the money and run. Nothing wrong with that. All right, we got one more question, then I'm going to go ahead and sign off. We've gone a long time today with this 920. Hope you guys did enjoy the workshop, though. If you have any questions at all, be sure to head on over to How to Trade and ask me, or just leave them right beneath this video or this live stream. I'll answer them there, too, as well. Let me see. Bobby Bob, Coach, today's U.S. President Trump speaks. What's your view on his speech? Well, it was a definitive speech. It was anti-UN, that's for sure. Very anti-war. Basically, laying out the United States' stance towards things that happen in Europe moving forward. I thought it was a big-time speech. Said a lot of things that were aggressive. His supporters, Trump supporters, are hailing it as being a great, one of the greatest speeches ever. Detractors saying the exact opposite. The truth is somewhere in the middle. The biggest thing I would remember right now, Bobby, is the United States is in a hypersensitive state. I don't know if anybody saw Sunday, the memorial for Charlie Kirk. 90,000 people showed up. 100 million people watched it online worldwide. It was a huge event, and what we're going into now is a time where both sides, the right and the left, really are knocking heads. And that's clearly spilling over into foreign policy, where Trump basically wanted the Russia-Ukraine deal done immediately, and it didn't happen. It doesn't look like it's going to happen either. And that's been a major detractor from his administration. I look for bold moves out of the administration moving forward. That's what I would take away from today's speech. There's no question the United States is hyperpolarized. It's a supercharged environment right now, political environment and social environment. It's everybody's sort of walking on pins and needles after the events of the last 2 weeks. So, yeah, the speech was a big deal. Is it a negative market driver, a positive one? I don't know. I just see noise out there today. I mean, that's all I really see. I don't really see a markets that have picked any sort of direction. Just a thought. All right, Mark B. Yeah, the Euro vacation was great. It was good. I'd never been to Greece. I'd never been to Germany. One of the things that I really liked in the Germany's airport, I was in Frankfurt. Anybody that's been through that airport, but man, they got some really good sandwiches in there, and they also got some pretty good beers. So I enjoyed a sandwich and a pint. I thought the food for an airport was amazing. It really was amazing. So that was good. And then getting an opportunity, I had a window seat, and I got to fly over Europe and actually look at the land and the topography all through Germany and down through Greece. It was really neat. It was really a neat experience, and I'm glad I went. I'm still very tired, though. My legs hurt from sitting that long. I'm one of those people that has to get up and go to the gym and do stuff, and so I'm still pretty sore. But I'm getting better. All right, everybody, I'm going to go ahead and sign off. This is sort of the first of our workshops this week. Tomorrow, we're going to preview a hot 24 hours. I'll be giving you my views on the market, maybe some updates on these 920 trades that we outlined today. And then for Thursday, we've got the Switch Markets live trading webinar, Forex and Futures. I'm going to take all of your questions on Forex and Futures. That's going to be available in the How to Trade trading room or on the Switch Markets TV or the Switch Markets YouTube channel. Be sure to check that out. And then Friday, we're going to be trading the Core PC Price Index. That's probably the big event for this week. Very much looking forward to getting some good action. All right, guys, you guys have a fantastic trading session. Thanks for joining me again. If you have any questions at all, private message me over at howtotrade.com or just leave a question below this live stream, and I'll get back to you in short order. All right, guys, until next time, trade the action well, and we'll talk soon. See you.